Alright guys, so yesterday we covered the 16 Wall Street firms that got charged by the SEC, one being Citigroup. We went over that Citigroup also cut dozens of staff, and the latest disclosed ownership they have in AMC is 215,000 shares. Citigroup is also the seller of APE, the new dilution plan. Now, I looked into the prospectus and I read section 12 because a lot of people were talking about it, and here's what I found. A short squeeze due to a sudden increase in demand for shares of our Class A common stock that largely exceeds supply and or focused investor trading in anticipation of a potential short squeeze have led to, may be currently leading to, and could again lead to extreme price volatility in shares of our Class A common stock, and the price of the AMC preferred equity units may also be subject to similar dynamics and volatility. Now, remember the 43 million failure to delivers? Well, check this out. Speculation on the price of our Class A common stock and AMC preferred equity units may involve long and short exposures. To the extent aggregate short exposure exceeds the number of shares of our Class A common stock and or AMC preferred equity units available for purchase on the open market. Investors with short exposure may have to pay a premium to repurchase shares of our Class A common stock and or preferred equity units for delivery to lenders of our Class A common stock and or AMC preferred equity unit. Those repurchasers may in turn dramatically increase the price of shares of our Class A common stock and or AMC preferred equity units until additional shares of our Class A common stock and or preferred equity units are available for trading or borrowing. And this is often referred to as a short squeeze. So in the prospectus of the 420 somewhat million shares of APE dilution, the sale of APE, the preferred equity unit of AMC, they go over a potential short squeeze in the coming future or leading up to one now, covering that short exposure may exceed the number of shares of our Class A common stock and or AMC preferred equity unit, and that they may have to buy up to deliver to lenders. I find this extremely important that they left this in the prospectus. Again, if you guys want to see this, I will link it down in the comments down below. It's section 12 of the prospectus. Of course, they have to lead this in there, and I don't want this to scare people. Under these circumstances, we caution you against investing in our AMC preferred equity units unless you are prepared to incur the risk of losing all or substantial portion of your investment. Now, I think they could have fixed this by also not just saying investing but short selling against this as well, but I wanted to point this part of the prospectus out to you. A stock has been thrown around, GTII, it's Global Tech Industries. This company announced a special dividend for shareholders in Shiba Inu token, and this has been covered by Ham Short Killer on Twitter, so go tag him, go follow him, whatever you want to do. He has been talking to me about this through Twitter for quite a bit now. So this is one of the SEC articles that we actually touched on, and he goes over this is how they steal, and he tells me stories about during a Securities Traders Association conference, vice presidents and more are concerned that people are just registering as market makers to get the short sale exemption rule. Now, we talked about the SEC article to where in regulation SHO, market makers pretty much have the capability to do whatever they want and control price movements. So he also says during this meeting, Gira concluded that a true market maker is not somebody who just goes in the box and all they do is sell. This is a gateway to naked short selling. Well, Global Tech Industries, a Nevada corporation, announced today that in light of the apparent consistent naked short selling of the company's shares, including Monday's high volume short selling at the time of market close, the company has taken and intends to take certain actions in an attempt to protect the interests of our shareholders. First, the company has contacted FINRA and requested they fully investigate the matter. The company intends to cooperate with FINRA in that regard. Second, the company will be contacting market makers in the company's shares and requesting that each of them review yada yada yada. Global Tech Industries and the CEO cracked down and pretty much just said, we know there's naked short selling amongst our company. Well, this stock is up over 40% yesterday, up over 15% today, and why is that? Because this article was from June 15th of 2022. Well, Global Tech Industries announced today that its board of directors approves management request to lower the original strike price of the warrants which were distributed last year to a new strike price of $2, while the original strike price of $2.75 appears to be within reach. The company is desirous of rewarding its loyal shareholders with an opportunity to participate at a lower price. The process to change the strike price and register the underlying stock with new strike price will be underway shortly. So again, this isn't for new shareholders. I believe it's 2 years or more, but this is the news that is essentially affecting short sellers as the company is going to be raising more capital, etc., and giving an incentive to its loyal shareholders. However, if you are in global tech industries, this is what I find interesting and scary. So short interest of free flow, according to Fintel, is 0.24%. Off exchange short volume is 4.7 million, aka dark pool volume. This is what's scary. So there's pretty much no short interest on this, pretty much no days to cover. Now, did they get out? Well, that would make sense because short interest is T+2, so there's no way they could have gotten out. What was the short thesis on this? Well, the entire short thesis is that the short volume is measuring these synthetic shares short amongst the company, which has been since the 22nd, 3 million, 1 million, 3 million, 4 million. Now, this is the 22nd, the first major pop on this stock, up 200%, and over the past few days has reached a peak of up 419%. Now, people who profited off this are probably thinking this is a scary spot right now. This is another reason you should think that. Now, just for full disclosure, I am not in GTII. I think it's awesome what they did and what they are doing to short sellers, but I still think there is fuckery going on, and I do think this thing is going to be coming down in the near future. This is scary. Something is going on behind the scenes. The short volume is too high, and there's no short interest. Also, if you look at the volume, for that day it was 4 million. There was 6 million in volume. 6, 8, 6. And before this stock roughly traded over 100,000 in volume. Overall, just be extremely careful on GTII. Now, a couple more things before we go over some charts. U.S. Embassy warns Americans to leave Russia. This is probably going to spook a lot of things amongst the economic side of things and the market in general. Even though we are having a green day, this is sketchy. Also, something weird is happening with excess death rate. If you come down here in Britain, there was 10,355 deaths of all causes in England and Wales. And this is for week 32. This is almost 1,000 more than normal, and just in 1 week alone compared with the 5-year average. This is a shocking increase of 10%. Now, if we look at the excess deaths among children ages 0 to 14 across Europe, there has been a horrifying 1,100% increase. Guys, this is weird. I just wanted to put this up in the video. Pray for everybody right now. We don't know what is happening, but again, this is sketchy just to say the least. The SPY got a little relief bounce, up 1.58%. Don't get excited yet. This is still in the falling channel that it's been in, and it has a long way to go. I wouldn't even care if this came up to 388 tomorrow. That is still a spot for rejection in my book on the SPY. Also, if we are correlating this to the '08 crash, which has been lining up perfectly, expect to get a little bit of a bounce over the next couple weeks before a drastic sell-off. Again, it doesn't have to repeat, but it does often rhyme, and the SPY could continue just to sell off. Yesterday, we talked about AMC potentially coming up and touching $8.20. It didn't do so, however, it is tracking what we have been tracking, and if this does continue to track, by Friday, we should continuously see green days, small green days, before getting a potential rip next week. Now, the chart is too disgusting and too extreme, so I'm going to remove the drawings real quick and tell you what I'm looking at. I'm looking at this sector right here before the January run-up because ultimately this is the most correlation amongst the chart to where we are now. Now, after this sell-off, you saw a little bit of this U and then this sort of double top play out before reaching a bottom. Now, I think you see the same thing happening right here after this sell-off, this little U and then this double top play out at around 16 bucks before reaching a bottom. The bottom being $6.03 or $6.26, somewhere in that zone, or where we are now, depending on your stipulation of a bottom, because even the second bottom over here was higher than the first bottom over here. And then essentially you would just see a U that looks like a cycle reset. And if we see something like this going into next week, that just tells me that we are set up identical to the January run-up and we will get one soon. However, I'm looking at a lot of other things right now and we will come out with another video soon. Overall, guys, hit the like button, engage the video, get it out to more people on YouTube, and make sure to share the video for me. Hit that subscribe button, drop a comment down below, get your 10 free stocks by hitting the link pinned in the top comments and downloading Moomoo. Also download MEXC Global using my link down below. I love you all. Lottery Stocks out.